The stock market has been essentially in free fall throughout most of this year, and while I do feel that the economy is looking really bad right now and things can certainly get worse from here, I just can't ignore the fact that we are in a very strong bear market right now with the S&P 500 down well over 20% from its highs, and the Nasdaq down even more at over 30%, and I just feel that prices are really low right now for many great stocks. So, regardless of whether they're going any lower, these are the exact times that I like to go out and do some shopping as a long term investor and pick up some stocks slowly in small amounts over time as the market falls so that I can build out my portfolio larger and be able to benefit from the next bull run when that inevitably does happen. So, in today's video, I'm going to list off for you guys all the stocks, every single stock that I'm currently buying right now as the market falls. Should be a really fun video. I hope you guys enjoy this. Let's go ahead and get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Let's not waste any time. Let's jump straight into my list, and we'll go ahead and do this in a rapid fire style so that we make sure to cover every single one of these stocks. Okay, now first of all, I want to start by mentioning my lower risk core foundational stocks that I've been buying because these are always the ones that I always put the majority of my investing budget towards. And right now, my favorites include, well, one of them is Google, ticker symbol GOOGL, who basically dominates every aspect of internet usage with number one market share in digital advertising, search with Google, browser with Chrome, mobile OS with Android, mapping with Google Maps, email with Gmail, and there's so many other things that they do. Yet, the stock is down almost 35% from its highs, leaving an even cheaper valuation than not only their own 5-year average, but also the sector on a PEG ratio basis. And I'm sorry, but the market leader trading cheaper than the sector, yeah, that's always going to be a long-term buy all day for me. I think Google is actually the most attractive stock in the entire market right now when you consider risk and value. Next to that, though, has been Microsoft, ticker symbol MSFT, which happens to be my number one largest stock overall in my entire portfolio. And yeah, no brainer here. This is a giant Goliath that somehow manages to break all conventional norms and continues to grow their financials by double-digit percentages every single year, despite their already massive size, with revenue and earnings per share both growing by around 15% each year, despite already doing $200 billion in sales and over $70 billion of pure net income profit. That growth at that size is absolutely insane. It's honestly one of the most reliable companies you could ever own in the market, and that performance has always translated over to the stock price, which almost never dips. However, right now is a super rare exception as the market has dragged it down by over 30% from its highs, leaving it at a fresh 52-week low. Anytime that happens to Microsoft, I'm a net buyer. Don't forget, Microsoft is one of the most heavily covered stocks by analysts in the market, and out of 44 estimates, the current price is still significantly lower than even the most bearish price targets. So clearly, everyone seems to know that Microsoft will be trading higher over time. And by the way, the price is not the only reason to own it. One thing that seems to always get overlooked with Microsoft is how good of a growth-oriented dividend they have as well. The reason for the lack of attention on it is probably because of how low the yield is at just a bit above 1%, but it's got some excellent growth metrics on it, like a super low payout ratio, about a double-digit growth rate, and close to 2 decades of consecutive growth, which is when they started paying it. Obviously, no one is buying Microsoft just for the dividend, but it's still a nice little bonus that I love collecting since I plan to hold this stock long-term anyway. So give me that dividend, I'll take it all day. Apart from low risk options though, I've also been betting on some slightly more risky but still great overall stocks for the long term, like for example Nvidia, ticker symbol NVDA, who I think will play a huge role in the future of artificial intelligence, cloud computing, autonomous driving, gaming, the metaverse, and much more, as they power much of it through their market-leading graphics chips, as well as various innovative softwares and platforms. This week, by the way, they released their new line of graphics cards that deliver up to 4 times better performance, and I don't see any sign of Nvidia slowing down in the future. Right now, the stock is experiencing a giant crash of well over 60% due to the horrible macroeconomy economy, as well as more direct issues within their own market relating to chip shortages and demand. But long term, I think Nvidia has tremendous potential, and I'm definitely in it for the long haul myself with this one. Another stock I've been buying recently, though, is the Facebook and Instagram parent company Meta, ticker symbol META, who, just like Nvidia, is also going through a massive crash right now of over 60%. But in this particular case, it has pretty much everything to do with their heavy investment into the metaverse, which is costing them billions of dollars every quarter. However, I feel that investors are forgetting just how massively profitable this company is, with almost $60 billion of cash flow last year alone, and a monumental balance sheet worth almost 70 billion in current assets, over 160 billion in total assets, and a current and total ratio of above 3 and 4 respectively. That is a fantastic balance sheet. As far as I'm concerned, investing in the metaverse is a big gamble on their part, but if there's any company out there that can afford to invest in speculative future growth projects while still maintaining unbelievable profitability because of their dominance in social media with over 80% market share and an absolutely mind-blowing user base of like almost half the world's entire population, well, it's definitely Meta, and I'm willing to invest at these prices. I've also been taking advantage of the falling market though by buying some of my favorite dividend stocks that have seen their yields reach record highs in some cases, and that includes stocks like the telecommunications giant Verizon, who, just like Meta, also generates gigantic profits every year, but then uses some of that money to also pay a mouth-watering dividend that right now is yielding close to 7%, which is the highest level that we've seen since the Great Recession, thanks to the stock crashing by almost 40% recently, leaving it not only significantly lower than the 2020 market crash, but it's even lower than any point in over a decade. In my opinion, the stock is not sustainable at these extremely low levels, and it will need to recover at some point, so I've been scooping up shares while I can. Another dividend that I think is insanely cheap right now is Intel, ticker symbol INTC, who is down by over 60% from its highs in what has been an even bigger crash than what happened in 2020. And there's really several reasons for this, including rising competition from rivals like AMD, as well as their own mistakes in delaying several new product releases. But despite those shortcomings, Intel remains a market leader in the CPU chip space, who not only generates way more profits than both AMD and Nvidia combined, but that also pays a record high dividend yield right now of well over 5%. And with US backed subsidies to build even more factories in America thanks to the new CHIPS Act, I just think that Intel is going to start turning things around in the coming years, and its current share price will probably need to adjust to a more reasonable level as a result to kind of balance that out. And finally, I'll just finish up here with all of the higher risk, more kind of speculative stocks that I've been picking up too. But just keep in mind that these are all much smaller positions that I'm buying in tiny amounts, with most of them being less than 1% of my portfolio, especially the unprofitable ones. But the largest of these include a couple of Chinese stocks, given that their market has been getting absolutely destroyed due to the rising tensions with the US, as well as their own country's zero pepperoni lockdown policies that are destroying the economy. But these are issues that I think will eventually pass, and if China wants any shot of being the world's superpower by 2050, like they aim to be, well then, I think they're going to need some of their best giant companies to succeed over the long term, which I feel definitely includes the giant e-commerce and cloud computing leader Alibaba, ticker symbol BABA, who happens to be down right now by over 75% from its highs, literally losing 3/4 of its entire value, and is now trading at some of the lowest levels that we've seen in many years. But I think long term, they'll make a large recovery. Another one that I'm betting on though is the internet and artificial intelligence leader Baidu, which is down around 70% from its highs. And with the first approved robotaxi service in China, along with the most AI patents around the world and leading market share in search and so many other things that they do, I just think that Baidu is a stock that I feel compelled to bet on at these levels, as it's crashing. As for the much smaller, kind of tiny positions in my portfolio, though, that I've been buying recently, but that are still less than 1% each, in terms of size in my portfolio, well, those would include some speculative stocks, like, for example, Palantir, ticker symbol PLTR, who I think will play a big role in not just data analysis and management for the US government, but also for giant corporations to help them run more efficiently. Now, they're currently down over 80% from their highs, but that's despite more than doubling their commercial customers this past year, while also growing their commercial sales by higher rates every quarter, which is key to them diversifying away from being so heavily dependent on government contracts. I think they're making great progress considering the horrible economy, and when things eventually stabilize, I could definitely see it being a high flyer once again, so I'm taking a chance on it. I've also started taking a chance on a couple of new fintechs, which I see a lot of future potential in, with SoFi and Upstart. Both carry significant risk as they are relatively young and not very profitable, especially SoFi, who still generates a net loss on the bottom line. But with that risk, I feel comes a lot of reward potential too. In the case of SoFi, they operate as an all-in-one financial hub that helps customers with anything from banking to loans to investing and much more. But the stock has been beaten down not just because of the macroeconomy, but also because of student loan forgiveness concerns that, in my opinion, have been mostly overblown. At this point, the stock has already crashed by over 80%, despite the fact that they've made giant progress in diversifying away from student loan dependence while also growing their sales by huge amounts of around 50% a year, and are working their way towards profitability as well, with dramatically improved margins in each of the past 4 quarters. Upstart is another fintech, except their main business has to do with credit ratings and connecting banks with borrowers that want to take out loans or refinance their existing ones, essentially acting as a middleman. But thanks to their artificial intelligence platform, Upstart has been able to improve upon legacy methods by not only reaching more borrowers that would otherwise get rejected, but also by dramatically lowering the delinquency rate of those borrowers as well, sometimes by as much as like a 75% reduction, which is pretty crazy. These are highly valuable results to financial institutions that they're willing to pay a premium for, and because of it, Upstart has seen explosive growth at times, with revenue climbing by over 200% last year. Ultimately, the deteriorating economy, though, that includes record high inflation and rising interest rates, is expected to heavily damage the lending markets, and thus that growth is expected to crash all the way down to just single-digit percentages in the coming years. As a result, though, what was once a skyrocketing stock that flew way out of my reach has now crashed all the way back down to my buying range after losing more than 90% of its entire value, which lowered the valuation down to just a 13 forward PE ratio and a PS ratio of less than 2. At that level, I feel much more comfortable taking a gamble, betting a small amount of money on this one. I personally do think that they're a little riskier than SoFi though, but right now it's the smallest stock in my entire portfolio, so I'm not too worried about the chance that I'm taking on them. I think in a bull market and a recovering economy, Upstart could potentially be a multi-bagger stock. It does have a lot of risk, but there is also a lot of reward potential there too. Anyway, those are all the stocks that I'm currently buying right now as the market falls. Again, I'm doing this in small amounts over time. I don't really see this bear market ending anytime soon, but when it inevitably does, I think we are due for a substantial bull run coming off of that. And when that happens, I want to make sure that I was able to pick up some more shares of some of my favorite companies at these really low prices and be able to ride that rally up, when that happens. So anyway, these were the stocks. What do you guys think? I'd love to hear your thoughts on all of these. Are there any stocks that you're buying? Let me know down in the comments section. I'm always looking to hear from you guys on those types of things, and I really appreciate you stopping by. If you did enjoy the video, please consider hitting the like button, subscribe if you haven't already. It really helps the channel survive, and it means a lot to me. But I hope you're all doing well, and I'll catch you in the next one. Take care. Bye-bye.